I wanted to start by looking at just the indices, just to get a feel for what this market's doing. A little hacked off this week actually, because I shorted this Dow last night and got stopped out. And of course here we are, well, quite a bit lower than we were yesterday. What, we've already seen a low of well, let's go down to a smaller time frame. Already seen a low of 200, and we were up there above. We were about 24,100. So there's a 900 pip drop so far. We're currently bouncing, but I'm not in it, or at least I've taken some of it, but not as much as I expected. That's trading. That's a shame. So at the moment, you can see I've got these fibs on this level here. So this range is taken from this range, and I've dropped the fibs from there to there to give us this potential push down here. So if we start to fail here, start to close lower here, then I'm then going to pick off these levels as targets. If we close above here, then we look as if we can come and visit that high. So we're still pretty flat for the week, getting some appalling data coming through, as you'd expect. The market seems to be pricing in the sort of period when this may complete. So you can see at the moment we are right in there. So whichever way, I think the path of least resistance is down, and hence the reason why I keep shorting these resistance levels to see if we can drop back. So what does that mean for stocks? Well, if you look at some key components, Boeing is in a pretty bad way. So if we come out of this little apex, start closing under 138, then that could get lower. Actually, let me just close. Well, we've actually gapped down. We've actually gapped down today, and so that's one of the reasons why the Dow is lower. Apple's had a good period, but is stressed, and it's come back to quite a key resistance area. It's not filled the gap. You could argue that gap's filled anyway from the point of view of that low. At some stage that will fill, but at this stage I don't think that's going to fill anytime soon. I think we are going to come lower. So after this push to the downside here and this bounce, so we may could easily get as high as 295, 300. Close above there, and that's extremely bullish. But if we start closing lower, then expect to see some lower, a retest of those lows perhaps, maybe worse. So decent push up, but markets really struggling. And oil, I'm actually long this oil. It's a titchy position. Invents today, but just looking to see if the deal that the Russians have done with OPEC might give this a bit of a squirt higher. So we had this push higher here. We're coming back. We've been drifting back at the moment. So if we can close, so there's a key area here. If we can hold that area, we might get a shove back to at least 33. At some stage that gap's going to close, but at this stage no signs of any significant pushes higher at the moment. Given that lockdown, it's still dominating, then that's hardly surprising. So that could well find itself lower. Okay, so I think one of the charts that's worth, a couple of things that's worth looking at, this is the volatility index, the VIX. So we've been tumbling down after that spike into 80, but we are still high. This is, this is all this area down here between 15 and 20, 25 is a normal pace. And even up here at 2630 is what was relatively high. So to be up here at 36, we have still got, this is a fear index. So there's still a lot of fear out there. And that's something to keep an eye on, because if that index, if you're looking to buy stocks and hold stocks, if we start seeing this perk up again, then that could suggest that now is not a good time to hold. If you look at the Nasdaq, now what the Nasdaq does, the rest of the markets follow, as far as I'm concerned. Nasdaq is really the lead market, so this is perking up a lot higher than the industrial Dow and the S&Ps, the financial S&Ps. So if this can close higher, keep a very close eye on the Nasdaq, because if we can get above this level, this is huge. You see, it's a huge resistance area. If we get above that level, then that could drag the other markets up. Like I said, what the Nasdaq does, the rest of the Western developed world tends to follow. So tech stocks could give us a big clue that this could be pushing higher. So let's have a look at some tech stocks. And if you look at, let me just get mine up. Bear with me 1 second. Where's my list? I've lost my list. I'll have to call them up individually in a second. What I was looking for is Facebook. And let me update this. I like Facebook a lot. It's so we've done 50%. So from this drop from 225, that 180 is a 50% retracement. So I would be interested in this one if we can pull back to around about the 160, 165 area. Oops, didn't mean to do that. So if we can pull back into that support, I would be interested to buy that to see if we can. So we've done a 1, 2, 3 wave push higher. If we can pull back, then we could start extending towards 200. So if you're interested in stocks, then that's one. Netflix has had a good run. Wow, look, Netflix, wow. Right up there at the 127. You can see how good these fib levels are. If you're not using fibs, then you should seriously consider it. I was looking for a deeper retracement, but this is just broken out. You can see we are right on the 127 extension. So this is a previous major level of resistance here at 393. So 2 days ago we were testing that, and now we've gone right up to an extension. So in theory, that could go as high as 480, 500 if that keeps going. This 395 now is a major level. So any test of 395 after this breakout is well worth buying. So that's a couple of stocks that are doing really well. So look at Amazon. Amazon's such an expensive stock. So that major October 19 low has got bought, and that is pushing up a lot higher. The other stocks I like, I'll come back to indices in a minute. The other stocks I like are the healthcare, this one in particular. I'm waiting for Medtronic MDT to come back. To around closer to 90. I think that looks likely at the moment. Notice the indicators I've got here is basic stochastic here and what's called an awesome oscillator. This is, I think it's unique to Pro Real Time, this chart package, but all it is the histograms of a MACD. So it works in a very, very similar way to the histogram of a MACD. So, you know, just popping up into resistance area here on these indicators. That's why I think we could still see some lower numbers on that one. And other one, Bristol Myers Squibb, that's doing really, really well. I would really like to see this one pull back around about the 55 mark. Let's have a look at, let's go back to the indices. Okay, the indices are getting a bit of a pop now. So close to 23.5. So like I said, yeah, we got to close above 24,000 this week for that to survive. Otherwise, I would still, even if we peak up here, even if we run into that level and get a sell signal, I would still like to be swing trade short on a move into that area if we get a sell signal. We are, the stochastic is extended to the upside, and awesome oscillator suggests that could punch higher, but at the moment that is, that's 300, roughly 300 pips off of the low at the moment. So that's seeing a nice little spike, and the oil is seeing a push higher as well. The reason why I'm buying oil, the reason I'm buying oil is because it's just so severely oversold. You know, we've come off this 161 extension. I just think it's the markets like to return to mean averages. And I think the mean average for oil is significantly higher from here. We've just got to, it just may not do it until we get some more evidence that some of these lockdowns are going to be lifted. So I'm not putting a lot of money on it, not you know, I'm not exposing my account to oil. I'm just dipping my toe in the water at the moment, nothing more than that. So I bought around about the $25, I'm 70 cents up at the moment, which in futures contracts terms is good money. Okay, now gold has been coming off. Anybody, if you want to look at some charts, let me know. I've got a few other things I want to look at. Gold is, it's broken through and is sitting on a lot of support now. So that could still go higher, very much go higher. And 1800 looks likely. If you look at these fibs, you've got 1770 up here and 1856. So if we keep going, we could find ourselves pushing into those levels soon. Okay, natural gas. Let's look at beans first, because I'm forgotten to update myself on beans, so it's useful for me to look at beans. Now they are looking very interesting. If we break out of this, we close above 860, I think that could pop. If we subsequently close above 880, I think that could really pop. I need to start nibbling on beans. Natural gas. Yeah, we had this spike higher last week, and here we are tipping lower. Let's get a longer trend line on this. Okay, so if we pop back above 17, I think we could potentially go and see 2022. Obviously, we're out of winter, early summer, believe it or not. It's pretty cold around here. Don't know about your neck of the woods. But nonetheless, you can still get a pop this time of year if the dollar stays weak. Talking about the dollar, let's look at the pound US. So we've had a decent push up here, but we are definitely struggling at this point. I think this is another good indicator of the appetite for risk. I think if this pound can push up, then that suggests that the market could push higher. And as we speak, the Dow is trying to inch up. Okay, let's look at some UK stocks. Anybody, let me know what you want to look at or talk about. Let's look at let's go back to the Dow a second and look at day trading. Let's look at a 3-hour chart. Yeah, so we've got a pin bar in a 3-hour chart, and we are trying to. You can see the chart pattern I've got here. So from the lows of 23rd of March and the lows of 3rd of April, we could come and see 24.5 plus. And the major resistance is obviously at that 25. So get a decent close here, and there's a break above 24.5, and that could pop. It is lagging the Nasdaq, so we might see some catch up here on the Dow. Drill down to a 1-hour chart, and you'll see this pink area is this gap. Now we talk about gaps quite a lot over the last few weeks, but this pink area is identifying the Sunday Asian Open, the high and the low of the Sunday Asian Open. So we've come off the Sunday Asian low at the moment, and beginning to look as if we could. The Friday close was 23,800, so it's possible at some stage between now and tomorrow we might go and see that 800 again. So that's one way of, if you're trading something like a Dow indice during the week, that's one way of looking at it, trading it. This is where I was getting short up here. I was getting short into last night's close, and then so I obviously had my stop too close. I needed about another 100, 120 pip stop, so didn't should have been a bit more. Should have allowed a bit more room for that, and had I done that, I could have caught that this drop, but I didn't. So I need to take that on the chin and move on. Okay, so that's an idea for trading intraday. Yeah, let's go to the FTSE and let's go closer to home now. Right, so this FTSE, this is an old fib level from, is it from last year? Let me just double check. No, what have I taken this from? Oh, this is a 1 hour chart. Yeah, wow, this is really lagging. Really not, the US market is trying to break up, and this one is falling over at the moment and looking lower. So we've got a breakdown on the cards here. So at the moment, next stop is 54.70, and if we really get into trouble and break under 47.80, then we're going to see 4,000 potentially. However, turn around and close above 57.50, 60, and we could at some stage maybe over the coming weeks and months go and close that gap. Right, EasyJet. Yeah, I talked about this last week, didn't I? I do not like these stocks. I think there are far better, personally, I think there are far better stocks out there. They've got no planes in the air. And my daughter had a ticket and they refused to give her the cash refund, insisted she take a voucher because they're so strapped. So it's bumped into that resistance and looks as if it could be coming down to 512. I'm just not touching UK stuff at the moment. There's the major pivot down there at 520. So if it comes down to 520 and can't hold, and this is what I was suggesting we would see last week. It's done a three-wave reversal. So I think we can, the way it looks at the moment, I think we can easily get to 520. And if we don't hold there, if it loses its footing, then that could be significantly lower. In fact, let me update, hang on 1 second. Let me just update this. It's basically a bear flag. It's potentially a bear flag. So if we let's fib this level. Yeah. So if we break these lows, I think we could see 345. 580, we've got to hold 580. If this is going to have any chance of survival, we've got to hold 580 on that one. BT I'm very interested in anyway, so let's go to that one. Looks very similar. So the UK's got beaten up today, hasn't it? UK stocks have got beaten up. So this 122, so we close underneath 122. We look as if we're going to come and see 110, 112, assuming we keep going. Notice this indicator hasn't even got above the midline. This awesome oscillator has not even got above the midline here. So unless we turn around and sit above 125, that's toast. That's heading lower. and you've got things like TUI. It's not Chewy, it's TUI. Yeah, these are in a bad way. These stocks are really in a bad way. That's come from quite some height. Yeah, got a bounce on the back of Thomas Cook's sinking. Good, yeah, good idea to look at the banks as well. Let's look at. This is one of my favourite stocks to sell. That's knocked into resistance at 48 and looks lower. Watch, see what happens at 42.60. Banks, Lloyd's, they've all got the same look about them, haven't they? They pushed up and so we've got to start. We could dip into that, but if we can come out at 30, then we could get a pop to 35 plus. Otherwise, if we stay in that pink zone, if we stay under 30, that's in trouble, potentially in trouble. So that's at quite a crucial point at the moment. They're all at, a lot of these stocks are at crucial points. Fresnillo, being a gold miner, so that's, I think it's struggling under the weight of the pound at the moment. So I'll be very interested to see that come down to a lower level. Barclays, same story. Having a hard time. Coming into support. So if we come down to 85 and close lower, that's going to struggle potentially. So I will keep a very close eye on that level, 80-85. This is not healthy. If you're looking for shorts, things like ITV, I think these are very exposed. Domino's Pizza, a very untidy chart. That's a really untidy chart. It's sold at that resistance. Don't like it. I've never really liked this one. I've not traded this one. If you are interested in it, this is a massive level. 275. Because there's several reasons. UK's taken a big hit with Brexit costs, and so we came into this bear market in a lot worse shape than the US in the first place. I think the pound has got stronger. The stronger pound doesn't help the UK economy. That makes our exports more expensive. So we've had exporters getting nervous and having lower volume exports. We've got taken a 3.5 billion chin, or more than 3.5 billion knock on the chin with the Brexit costs and the loss of confidence in that period. And overall, we're just, we came into this in a weaker position in the US anyway. So a couple of, any other stocks you're interested in? Bear with me 1 second. If you contrast this with some US stocks, excuse me a second. Yeah, contrast this with, let's look at Bank of America. In the US, it's we're just literally getting into earnings season in the US. So here's Bank of America. I think they might have reported today. I can't remember. I have to go and check. So that's on the line. Let's look at JP Morgan, because they are same story. Very weak. And let's look at Goldman's. And so Goldman's, look how this one's bucking the trend. You know, if you want to trade some good financial stocks, then you know go for quality. Obviously, in theory, Barclays has the best balance sheet in the UK, but these guys are likely to give you more growth than the likes of some of the struggling UK ones. So obviously, yeah, we could. I think this will. I think short term this will come lower, but ultimately, this is well positioned to pop back to some of these highs. It's well positioned to crack through 200, 220 at some stage in the coming weeks and months. So I would be interested in buying a pullback on that one. Like I said, I'm not a massive fan of. I tend to concentrate on healthcare and techs. So that is more of the area that I'm interested in. Let's look at some more UK stuff. Let's look at Rightmove. They're all. It's as if you're looking at the same chart. It's as if I'm on the. When you look at the UK stocks, they've all got this same brief excursion to the upside, and all just dipping, hanging a little bit precariously into the support areas. There's not much green on the UK today. So here's Ocado. So this is played out well. There's a nice structural break up, nice and high though. That was that's done really well. Wow, that's up 50%. So just to recap then, I'm keeping an eye on Fresnillo for us around here. Why is that not working? Hang on a second. If BT can stabilise, I'm interested. Not looking at UK banks at this stage. And let's have a look at the health of Persimmon. Yeah, and these are big, fairly well financed companies that are really struggling. So I'd be very careful. Centrica, that's a terrible stock, isn't it? Really, really terrible. Let's go back to some US ones to move. Band seems to be slowing out, or certainly my data. Look at Tesla. So their Chinese factories have opened up, and so with a huge push up here. That looks as if that's coming back to 900. Lovely stock. So Tesla and Netflix doing really, really well. Lovely little breakout pattern. So I'd be very cautious on the UK stuff. Let's have a look at some FTSE 250. So much red on UK stocks. Just trying to pick some I like. I was watching AA, but no, I don't like it. Anything else you're looking at? Well, I'll try and find some other good ones. Genus. Not sure what Genus is. There is a food brand called Genus. I don't know if that is the one. That looks higher. Bus companies have been asking for bailouts, so that looks lower. That's got relative strength. Elementis. So, you know, the UK markets have taken quite a hit today, but this is sitting up, and it has been up there at 184. So keep an eye, if you're looking for UK stocks, see if this one can drop into that 50, 54 area. Because if we get any kind of bounce in the markets, if a stock with relative strength could do well. Greg's, that's better than a lot, but not great. Wow, it's really hard to find some good UK stocks. Really hard. Okay, let's have a look at Tesco. Where's my Tesco? Okay, I'll have to punch it in up here. Better. A lot of resistance at 240. I think this could do well. I think short term that's potentially lower, but if you see anything close to 200, 210, if it comes back to that floor, that's it. It could break out. If we get a close above 235, whatever, 240, that could break out. But it's certainly got a lot of resistance up there, and could well see, you know, closer to the floor, that support soon, if it doesn't break up here soon. So really hard to find some good stocks. In the meantime, the Dow is struggling. It was 100 pips higher about half an hour when we started this, about 20-30 minutes ago. So I'm overall bearish. So I'd be I think the opportunity for stocks, we've had an opportunity from that 23rd of March upwards, but I think short term, I think we're lower, and then if we come down, if we do find ourselves down here at 21,300 or so on, and some of the restrictions get lifted, then we could see a big bounce. I think that's the problem is that we're just yeah, we're not likely to see any restrictions lifted short term. So I think all the time we've got that, we've got the threat of seeing lower numbers, I think. Is that helpful? Okay. Anything else you want me to look at? Because I'm thinking of disappearing now. Alphabet. On the US market, you're talking about Google not Google. Yeah, okay. What am I trying to think of? It is Alphabet. It is Google, isn't it? Yeah. I have misspelled it, haven't I? I can't type. Yeah, not bad. Not bad. But again, it's right at a pivotal stage. It's hit resistance yesterday. So if we close above this, then we could potentially start to fill that gap. But if we can't get a good leg up sometime soon, then I think we're going to come back to at least that support. At this stage, I would have thought we'll come and see 1200, and if we hold 1200, then we could start to push into that 1475 soon, well, over the coming weeks anyway. I don't think you're going to get a massive push higher than that. So it's a bit of a decision point. Path of least resistance is lower, so we might see 1200, at which point, if we get a good week, we might punch through that. Right, I enjoyed that. Thanks very much. Good to look at a variety of stocks and just sweep across the markets just to get a feel for what's going on. Anything else before I go? If you're interested in my newsletter, it's $27.99 a month, and it's going to be covering indices, UK and US stocks, if you're interested. Otherwise, tune in next week. And keep an eye out for, not been putting out, had such a crazy week this week, not been putting out so many videos, but I will obviously be giving you updates as well. Right. Thank you for joining me, and not quite sure why numbers were so low, but anyway, I'll catch up with you very soon. Thanks a lot, and stay safe. Bye for now.